Now, the Bank of England predicts that UK interest rates will remain unchanged at 5.25%.
Yeah, inflation figures surprisingly rose to almost 4% from November to December. That's despite data showing that the cost of living pressures have eased a tiny amount over the last few months.
Well, joining us now to discuss this further is former advisor to the Bank of England, Roger Gewold. Good to see you as always, Roger. So what do you reckon will happen at midday then? Do you think it will remain unchanged?
I think it'll be a hold, yeah. I mean, the European Central Bank has held the rates in the last few days, and the American Federal Reserve likewise, and the Bailey Osiris and his thick-skinned colleagues at the Bank of England, who don't seem to want to listen to anybody who disagrees with them, do seem to follow the states rather slavishly, so I think they'll probably hold.
OK, do you think that's a good thing? Because we've had you on a lot over the last year or so, and you've repeatedly called for cuts to the interest rate.
Well, I think they really should be reducing it now. Inflation is falling, despite a small blip for cigarettes and alcohol in December. But inflation is falling. Nothing to do with them, by the way. We've already talked. That's another story. It's another show. And they should be reducing rates because they're still strangling the economy. I meet people everywhere whose mortgages have gone up, my gosh, £1,000 a month. You know, it's just terrible stories everywhere. Why he's holding the rates where they are, if he continues to do that, I don't know. He, let me say, allegedly, Mr. Bailey has a track record both at the Financial Conduct Authority and at the bank of doing things too slowly. He waited too long at the FCA for some disasters that happened, let them happen, and allegedly cost people billions of pounds. He waited too long to start to raise interest rates, then dumped quantitative easing, printed money all over. It was like pouring oil onto a Californian forest fire. And now if he waits too long to start bringing rates down, even gradually, he is further wrecking the country.
Except, is in terms of being proactive, could there be a sense here that you keep them the same in case, you know, the Red Sea issues and things that we've had at the moment? Is he anticipating a problem there?
I took the economics course, Stephen, because there was a girl I really fancied. And when I finally made my move, she told me to naff off. And so I figured all I could do is be really good at it. Maybe she'd pay attention. She didn't. But, you know, economics is really quite boring, frankly. But watching this unfold, you know, where people don't even pay attention to the basics, and you've just given a great example. How will crippling the three of us on our mortgages, our food, our energy, stop the Houthis from shooting at Red Sea shipping? And if I may go on a moment, I'll give you an even better example. The thing that really does fascinate me and doesn't put me to sleep about all this. I mean, the Bank of England, this Bank of England, is the worst management of British monetary policy since, I don't know, since Little John lost Robin of Sherwood's codpiece coin purse in Sherwood Forest. I mean, it's appalling. Red Sea, one thing, but wages. Oh, we're going to fight inflation. We're going to fight inflation and curb it further by raising interest rates because wages are going up. Well, wages went up because prices are higher and it's costing people more to live. How in the world, by raising wages, do you not compound the problem rather than make it better?
I mean, if the rates do stay the same, it won't be good news for people who are really struggling. I don't know if you saw the report by our reporter Sophie Reaper a little bit earlier on, Roger. It's from a new study that shows 35% of people living in the UK right now are worried about homelessness because they can't keep up with their mortgage payments. So they will want to see those numbers coming down. When do you think that will finally happen?
It's happening. I mean, thank goodness what is happening is that the 14 wholly unnecessary interest rate rises, which, of course, did nothing to curb inflation, you know, killed the property market, killed the mortgage market, killed the rental market, destroyed the bank of mom and dad, made probably a whole generation of young people unable to get on the property ladder. But it also, when it killed the mortgage business, made the mortgage lenders say, wait a minute, our volumes are dropping like a rock. So fortunately, they've started to compete with each other by lowering rates, notwithstanding whatever the Bailey-Osirus is doing. And I think that that will continue. So thank goodness the mortgage rates aren't shooting up, because these people are now in a deadly fight with each other to keep their business levels going.
Yeah. Oh, well, one small glimmer of hope on the horizon with that one. Roger, good to see you this morning. Thank you.
Thank you.